All right, everybody. Sit down and take a deep breath because this is huge. And I mean huge. In fact, there's been nothing bigger than what I'm about to talk about in the last decade with regard to the global markets. This is my Markets A Look Ahead segment. This is Sunday, July 28th, 2019. People, I cannot overstress to you how market moving the event which is going to occur this week is going to be. Let's talk about that. So we're going to hear from the Federal Reserve, the central bank of central banks. The Federal Reserve has literally become the world's central bank at this point. Again, there's a lot of reasons behind that. The U.S. dollar is still the reserve currency. So the Fed is the central bank of central bank. And what they do, what they say, is monumental. And again, let's put this into perspective. We have not had a rate cut from the Federal Reserve in a decade, over a decade. So the fact that I fully expect that the Fed is going to cut rates this week, again, on Wednesday, I cannot tell you the effect this is going to have on the market, one way or the other, and a few other things we have to talk about too. So let's cover that. It is widely expected, and it's been priced into the market, that the Fed is going to cut rates this week. The big question is simply how much. I believe the general consensus now is 25 basis points. I am going to agree with that at this point. There are some that are saying 50 is coming. There are some that are saying none. But the general consensus from Wall Street, from me, is a 25 basis point cut. The bottom line is a cut. All right. Now, how they word it is going to matter. There's no doubt about it. And again, as I have explained to you, this is the beginning of a series of rate cuts, not just from the Federal Reserve, but from other world central banks as well. The European Central Bank is already setting a stage for an extravaganza with regard to buying debt, quantitative easing moving forward. There's no doubt about it. So this is also being anticipated in the market. So let's stick to the Fed real quick. So again, a cut is coming this week, in my opinion. And I think it's the opinion of Wall Street. It's priced into the market. So with that said, in the event that we do not get a rate cut, you can only imagine the havoc that will be released on not just the United States stock market, but the global markets will react violently and negatively. There is no doubt about it. Now, I expect also that when the Fed does make their announcement initially, I would not be surprised at all to see stocks sell off a little bit. Again, it's priced in. When a cut is priced into the market, or anything is priced into the market, generally it turns out to be what's known as a sell the news moment. You understand? So, but this is going to be temporary. Again, we might see, more than likely, we're going to see a dip, and then the market's going to go higher. So that would be a buying opportunity, in my opinion. You make up your own mind. Let's back up just a little bit. Let's talk about the recent GDP number we just got. First of all, you have to laugh at how the mainstream media is spinning this. We got a GDP, gross domestic product, print of 2.1, and the mainstream financial channels are praising this like it's some kind of a good thing. Even Larry Kudlow, you know about Larry Kudlow. But let me explain this to you in case you don't know. The reason why, number one, that they're calling this number a good number is they were expecting it to be worse. They were expecting a GDP of 2, not 2.1. Now, first quarter GDP was 3.1. We just got a print, again, of 2.1. What does that mean in the grand scheme of things? Well, our economy is clearly slowing. Let me put another perspective on that. Let's say first quarter GDP, which was 3.1, and second quarter, let's just say the number was 3.1 again. That doesn't mean our economy is growing. Our economy would be staying flat. You understand? First quarter 3.1, and if we had gotten the second quarter 3.1, it would have been flat. But we went from a 3.1 to a 2.1, a full percentage point lower. So that should explain to you that who's ever trying to tell you that this is a good number and that our economy is growing, either number one, doesn't understand how the GDP number works, or they're lying to you. I would be willing to say they're lying to you, because no person that speaks on one of these financial channels are that stupid. Maybe they are, I doubt it. So that 2.1 print, to me, was a lock that the Federal Reserve will cut rates this Wednesday. You understand? Very simple, very, very straightforward. Now, with that said, let's move forward just a little bit. Balance sheet runoff. So apparently the Federal Reserve has been shrinking its balance sheet. First of all, and second of all, I don't believe it at all. I don't think the Fed's been reducing its balance sheet whatsoever. I don't care what numbers they put on their digital screen. If you go to the Federal Reserve website, you'll see it shows the balance sheet shrinking. Do you believe that's true? I don't believe it's true at all. I also believe that world central banks have been buying each other's debt for a very long time. I think this is common knowledge at this particular time. I was probably the first guy to reveal this to everyone, literally the first guy out here to explain to people that world central banks are buying each other's debt, keeping it off balance sheet. It's very, very simple, and I fully believe that is going on. But let's stick to what they're saying. So the Federal Reserve is apparently going to end its balance sheet runoff in September. There are some that believe the Fed is going to end now, this week. I'm not sure how to take that, because I don't believe it's happening anyway. But if the Federal Reserve were to say on Wednesday that they're gonna end their runoff early, obviously this is massively stock market positive. So we're going to have to see how that plays out. So, but those are the two big things that we have to watch for. How much the cut is. Again, I think it's 25. Balance sheet runoff. Are they going to end it early? We'll have to see on Wednesday. And I would expect volatility in the market. I'm sure you do too. So that's kind of where we are at, people. And again, I'm going to say it. I cannot overstress to you how important this is. This is the most important event in over a decade with regard to monetary policy from the Federal Reserve. It's going to be huge, and the ripple effect is going to sweep the globe. There is no doubt about it. If things go the way I explained to you, again, you can expect stocks to be volatile, yes, but hit new record highs moving forward. There is no doubt about it. Again, where is cash going to move in a rate cut environment? Again, it opens that doorway wider for cash to move into risk assets. You have to ask yourself, why is the Federal Reserve so and our politicians so fixated on hyperinflating the stock market? Again, in my view, the world central banks, the Federal Reserve, none more than the Federal Reserve, are serial bubble blowers. They inflate bubbles and then they deflate bubbles to simply foster a wealth transfer. That's all it is. It's very simple. They do this repeatedly over and over and over again. And then the members of the middle class sit there going, oh, what happened to my 401k? What happened to my investments that only make money when the stock market goes up? Again, think about it this way. Who came up with that idea where an investment only makes money when stocks go higher? It had to be a banker, right? Because the bankers themselves, and guys like me, don't care which way the market goes. It goes up, we make money. It goes down, we make money. And the middle class, or the dumb money, that's what it's called, gets stuck holding the bag. Always. It's a repetitive cycle that will not stop. It's a terrible thing. All right. Now, with that said, I want to give you two heads up. Number one, my website, traderschoice.net. I will be discontinuing every single one of my free publications, and I will be replacing it with a new free publication. Again, I will not charge you anything for these, but you can only imagine how much these are worth. If you were to go to a store and try to get like a book on trading or investing, what would you pay for it? Or financial advice, what would you pay for that? This is free. Absolutely free. However, once the publications on my website disappear, they are gone forever. They're not coming back. And if you email me and say, Greg, I'm sorry I missed it, I feel sorry for you because I'm not going to send these out. When they're gone, they're gone. So go to my website, traderschoice.net. There's a link in the description of the video. Left-hand side of the page, upper left, you'll see all my free publications. Download it now because in a few weeks, probably 2, they'll be gone. I'm just going to give you that heads up. Number 2, and this is kind of big too, this coming Tuesday, I will not be doing a post-market wrap-up. Instead, what I will be doing, I have volunteered my time to help feed the homeless at one of our local homeless shelters. Not for dogs, for people. I'm going to, because I know most of you understand that I am a major animal advocate. I donate monthly to animal shelters. Well, this week, I'm going to donate my time to take care of the homeless, one of our local shelters. So this Tuesday, I will not be doing a post-market wrap-up. You know where I'll be. I will be feeding the homeless, volunteering my time, and I'm going to urge more of you to do things. I want to set an example here. If I'm doing it, I want you to think about what you can do to help the exploding homeless situation here in the United States. It's an incredible thing. We're seeing a homeless boom in an economy that's supposedly taking off. No, it's only benefiting the upper echelon of society, and the setup is very simple. The middle class is being exterminated on a grand scale. So with that said, think about what you can do. Even if it's just a few hours once a month to help your fellow human beings. We need each other. And, I just don't talk the talk. I walk the walk. All right. With that said, this guy loves all of you. I hope this video made sense to you. If it did, please share this video. Get it out there. Let people hear this stuff. And I will see you in the morning. Looking forward to it.